Good evening, students. Welcome back. So far, we have discussed some of the areas related to audit, wherein we touched upon, for example, PSU's aspects, okay, in the previous session. So today we are going to pick up another, we can say, very interesting and you can say upcoming requirements, particularly for example, when you talk about something that we call as ESG, so this is one area which has been evolving quite significantly over the last few years. And in relation to this ESG, we also have this audit aspect which is required to be considered. So, okay, so the assurance side as to how that is required to be dealt with. What are the things you'll consider therein as an auditor? So that's something we are going to discuss today. Then we'll talk about this another very important topic. I'm calling this to be important because when you look at today's times, the way the audit is actually required to be done, or if you look at the future aspects, the way we'll see the things happening on the ground. Yeah, so of course, all of these concepts we have been discussing, those concepts are going to stay, but the approach, the methodology, the way we are going to get on with the procedures, they are all going to be based on technology. And it's not only from the audit perspective, it's also something from the management perspective that we need to consider. So when you talk about any company today, so all the companies are in an IT environment. So that's how the companies operate. And in respect of the audit, we have discussed that audit will always involve this aspect related to the environment, or you can say the process of the entity. So that's something which is required to be evaluated to begin with. Correct. Now, in such a case, the understanding of the IT environment plays a very important role. And once you understand that, audit of IT environment, or you can say audit of these processes which are run through what technology, so that will again play a very important role in terms of the overall audit methodology. Because if, let's suppose, the auditor is not able to do that for some reason, or auditor is not able to pick up some of these things, then of course the effectiveness of audit will be significantly compromised. Yeah, so that's why we can say it's a very, very important element as far as the audit is concerned. And that's why I believe this is something which is extremely important for you as an auditor, for you to get onto these concepts and of course get into the details of each and every concept, not only theoretically. Of course, theoretically, this is a part of your examination. So of course it's important for you, but practically as well. Yeah, because tomorrow when you go get onto the audit, so this is something you'll require. And if, let's suppose, we are planning an audit without some of these things, or without the understanding of this digital audit or this IT environment or the IT systems, then of course we are missing out on a very, very significant part of the entity's environment, or you can say the overall audit approach is going to be quite significantly different. So now, let's try to understand as to what do you mean by this digital audit. Okay, so when we use this term digital audit, what does it imply? So you can say digital audit is all about placing assurance on effectiveness of IT systems implemented in an organization, right? Now, technology is becoming an integral part of day-to-day business operations. There's no doubt. It's already a part, but this is only extending. Yeah. In fact, the dependence of the businesses on the technology, and particularly the developments that you see over the period with this AI now, it's quite significant. Without which, do you see any business which is able to survive? No, not really. It's essential that the organizations therefore review their technology related controls. Now, what are going to be the features of digital audit? So it will encourage the auditee to embrace the latest technological advancements. Of course, yes. If you look at it from the entity's perspective, and provides confidence to the auditee to stay updated in a constantly evolving environment, which actually is essential for the entity. Not only for the purposes of audit, but otherwise also it's extremely important. Now, because we are going to approach this entire audit process basis the technology which is involved. So therefore, we can very well say that the quality of the audit is going to improve quite significantly. Yeah, because if we don't do that, then it's definitely a big miss, right? Now, if let's suppose we make the use of certain tools, some softwares, as against the manual systems as an auditor. So we are not looking at it from the entity's perspective now. Let's suppose if the auditor were to make use of some tools, say some data is required to be processed. So instead of doing manually, if let's suppose you're using formulas, you're using Excel spreadsheet, yeah, as basic as that. So these are all what? These can also be the tools. But as though the only tools available? No, I'm just taking a very simple example for that. So can we say that this will bring in some efficiency? Of course, yes. So it may appear to be a necessity today, but as compared to the manual approach which one might be following, this is definitely a significant, you can say, way of bringing in the improvement, bringing in the efficiency. So many of today's digitally enabled processes can be orchestrated to operate autonomously 24/7. Now, if let's suppose we are able to devise some systems, let's suppose there's a process we have looked at which has some functionality, and let's suppose we have sort of set up maybe a particular function or maybe a particular tool. The way we can look at it, that every time you have this parameter, so this is something which is required to be processed. Yes or no? So in a way, what are we trying to achieve? We are not only trying to achieve the efficiency, but also standardizing some of the processes. Correct? Now, just try to understand, if let's suppose you are looking at a company, say you are auditing the financial statements of a company, and there's a particular area that you come across, okay, and you find that in respect of that particular area, volume is quite significant. Okay, means the data which is required to be evaluated, say which is required to be verified, for which some samples are required to be selected, find that is quite voluminous. Now, in such a case, what can you do? Now, instead of getting bothered by such a significant or the voluminous data, you can make use of some tools which are available. So this AI can help you processing the data. Now, when you say processing the data, when you say performing the procedures, so what do you do? You will always do that on a sample basis. But let's suppose instead of doing that on a sample basis, if you are able to somehow process the 100% population. Why? Because if the functionality is set, if the tool is available, which can just process the entire data, say within a few minutes. So over there, what are we actually trying to achieve? We are trying to bring in more efficiency. Right? And we are also trying to bring in an improved quality of the audit. Yes or no? And thereby, what will happen? Of course, the conclusions that will be reached, opinion that will be framed, basis that will always be a better one, improved one. Yes or no? Yeah. So that's the approach which is always required to be considered. Right? Now, some of the features of digital audit are very, very important and something which can always relate to. Yeah, because we are all aware of the technology, we are all aware of some of these tools and the systems which are available, basis which, what can you do? You can just look into anything. Now, before we get on to the further details of this digital audit or some of these aspects related to the digital audit, let's also try to understand. Just a minute. So I'll just share one working file. So let's also try to understand as to why is this digital audit or this tech environment that we are talking about. So why is this important at all? Okay, and I'll just try to touch upon the very basic aspects of audit, with the help of which we will be able to understand as to why this IT environment, why these digital audit framework that we are discussing right now is something which is not only important but also a necessity kind of. Yeah. So now let's suppose you are talking about a company. Say we are talking about a company ABC. Now for this company, whenever we go and audit, so we'll always try to understand the company. So understanding the company means understanding about the company in all respects, its systems, its processes, okay, various processes it may have related to sales, related to procurement, related to payroll, yeah, all of these things. Now, for all of these aspects, if you actually talk about a company's, let's suppose you can just say that this is your ABC Limited. Now, in today's times, can we come across any process which has got any activity, or you can say set of activities which will not be linked to, you can say, the technology in some way or the other, it's very difficult to find that, right? So that's why we can say that this company will always have two aspects to be looked at. If let's suppose we can say there are few things which are actually moving in a manual mode, it's the manual environment that's being followed. So you'll always have this automated systems, IT systems, IT environment, right? So now, let's suppose if we were to audit this company. Now again, don't get confused with the proportion. So proportion is not something that we are trying to look at. If let's suppose we were to audit this company. Now, can we just simply look into this part? And can we just simply ignore this part? Answer is no. Yes or no? Now, this IT environment of the company is not only important, but this is also very significant. Actually, if you pick up any company today, you'll find that this is a significant chunk. Yeah. So that's why without this, without the understanding of this, without the audit of this, can we actually complete our audit? No. If let's suppose we talk about banks, just think about a bank. Can we say we have a bank today that can survive without the technology? Answer is no. Okay. Now, as an auditor, if you were to go and audit, so can you really handle the volume which a bank will have? And can you just really go and keep doing sample selection? And on the basis of the sample testing, get the comfort over the entire population? What do you do with the control environment, which is actually a starting point for you? So, no, what do you do with that? How do you do that? Because most of these control aspects, what will you find? Automated. Means what? Driven through technology. Yes or no? Right? So that's where one must understand the fact. Then when we talk about this IT piece or the IT environment, it's a significant and the most important aspect for audit today. Right? Now let's try to touch upon some of the other aspects. So I'll just go back to the same document. Now the next question may arise as to what are the considerations one may have. See, broadly, some of the considerations will always be looked at the process. Means you'll have to look at it from the perspective of what is involved in the set of activities. Yes or no? But some of the considerations you'll always have, which are quite common for any organization, and the challenges attached to that. First of all, we need to know what the business benefits, the organization wants to achieve with automation. Because if they have set up something if they have a process in place, if they have a system in place, and which is all automated, there must be a reason behind that. If let's suppose today you look at a company where you say that if let's suppose an intent is raised, so that intent is let's suppose raised to the ERP, see SAP is used for raising that. So that will eventually be linked to the PO, and every time you generate the PO, that has to have some linkage. And every time you have a purchase invoice, that has to have some linkage with the PO. Now, why there is a need for this? You may be able to understand this. And how do you get the control over that? Yes or no? But the business will also get into the similar thought process. Think people first and do not understand change is difficult. Now, this is again very important area. To talk about technology. Okay, so therein basically we are just trying to improve the process. And we are trying to bring in the efficiency. But of course, that may have some challenges. We are also discussing the challenges of digital audit today. So does it mean that this challenge will become a difficult thing or difficult exercise? No, not really. Target the right processes. Of course, the process that we look into becomes important. Now, automation is something which is nothing but a part of this entire piece. Now, let's talk about this digital audit, or what do you mean by this digital audit? Means if let's suppose you were to go and audit digitally, okay, so how would you approach this entire process? So that's the next aspect we can now discuss. Auditing digitally is using advancements in technology for conducting an effective and efficient audit. With a rapidly growing IT environment, it is essential to adapt technology in auditing practices. So we can say it's a time to digitize the way an audit is delivered through automation and innovation. So basically, we are trying to think about a situation or the methodology wherein our focus will be on what? Our focus will be on bringing in the automation in the audit itself. How to improve that using the tools, you can say, right? Using the tech which is available. And what is the objective? To bring in the efficiency, to make the audit more effective, right? What are the things? Let's talk about it. Say, let's suppose if you were to go and understand a particular process. So today, what do you do? Let's suppose client has an SOP. So you'll go read the SOP, you'll have discussions with the management. Correct? What if you have a tool available which can just throw up the key points or maybe the summarized version of that? Similarly, some of the procedures that you come across. I'm talking about the business procedures and not really the audit procedures. Basis which, what do you want? You want to do a assessment of the risk. Now, if let's suppose you have this tool available, which can help you do this exercise. Of course, you will want to go through that in terms of review, but in terms of executing that, putting that at the first place, if let's suppose AI is able to do that for you. Yeah. So that can help you bring in the efficiency. And effectiveness is again something you will keep evaluating alongside. Data analysis. Now see, data analysis, in fact, you would have heard about this data analytics quite a lot. Yes or no? So it's a not, it's a, we shouldn't really say it's a new thing. So it's actually quite old, quite settled in terms of the data analytics. Now, there are a lot of tools which are available to us. And the objective over here is not to get onto a particular tool and evaluate that as to whether that is really effective or not effective, or how effective is that. Our objective over here is to understand that are we really making the use of such tools? Why? Because this can help the auditor quite significantly in terms of processing of the voluminous data particularly. And once you are able to do the analysis, okay, means once the data is processed for you and you have reached some, say, some sort of assessment basis that data. So how can it help you? It can help you quite significantly, right? Now, these are some of the things which an auditor needs to bring into his consideration. Now the next question may arise that some of these considerations an auditor can always have. But the problem arises as around the knowledge or at times the expertise. Why? Because if let's suppose auditor were to audit this, and if the auditor were to get on to the involvement of some of these tools, okay, if the auditor were to get on to the tech environment of the entity, understand the automated systems and eventually go and test them. Now a question may arise that what if the auditor doesn't have the knowledge, or can we expect the auditor to have the knowledge about some of those aspects? Always? Answer is no. It's going to be very, very difficult for the auditor to have an understanding about some of these things in particular. Yes or no? For an auditor to have an understanding shouldn't be expected at all the places. Of course, he can have some understanding in relation to some of the maybe the basic processes of the organization on the basis of the past experience in particular. But for this expectation from the auditor to have the complete understanding and also to bring in the involvement may not be appropriate, and that's where the auditor may also need some experts. Yes or no? So the client is using a particular software. Yeah. When you go as an auditor, you don't understand that. Some of the reports which are generated through the system, so they are all automated. They are all generated through the system. It's all automated, right? Now, what do you do about it as an auditor? So there are two ways to look at it. that you just go and rely on the information which is produced to you. This is also very commonly referred to as CGI, computer generated information. It's all automated. Yeah. So if you go talk to the management, they may say it's all system generated. So there's no manual intervention there. Now in that case, what do you do? How do you audit that? Yes or no? How do you go about it? So can we just say that it's all system generated from the company's side? So that's why as an auditor, you can just go and rely on that. Or if let's suppose you were to go and check few samples. So even if you are checking few samples, how do you know whether this report which is generated, which you are using for the purposes of your analysis, is something that you can rely upon in terms of entire information which is produced there? Can you really do that? Without the audit, answer is no. Now, do we have any mechanism through which we can do that? Answer is yes. See, if let's suppose as an auditor, you are able to go and check the logic behind that report. Because if the system is generating some output, so system is also enabled. Yes or no? So if you go check the functionality, if you go check the logic around it, so what will happen? You'll get the comfort around it. Yes or no? So that's something which becomes important as an audit. Yeah. That's something which is important for the auditor to look into. Right? Now, without which, if you go look into the things, it may not be appropriate. Okay, so that's you can say an essential element of the audit. Right? Clear on this? Now comes the question that if let's suppose auditor were to involve experts, then the management will also have some experts. The management will also have a separate IT team. Generally, they will also have this CTO, the Chief Technology Officer. There will be a lot of personnel who are reporting to. But over there, once again, when you look at the IT team or the IT personnel from the management side, we are talking about the company. Yeah? So can we just go and rely on what they are producing as it is? Answer is no. Yeah, so as an auditor, what is important for us? For us, it is important to go look into the things. So no, go look into the things which are available to us. Because if we are not doing that, then of course, the quality of the audit is compromised. Yeah. So the next consideration you can say is going to be the involvement of the IT experts. Now, when you talk about today's times, any audit you go and perform, so what will you find? You will find that there will always be the involvement of an IT expert. Why? Because you don't find a company which doesn't have this tech environment. So how do you go audit the IT systems? How do you go audit the IT controls, whether it is about application controls or the general controls, whether you talk about the CGI which is available to us and with this AI which is evolving quite significantly. So who will go and understand that at the first place? Forget about audit. from the audit side. So it has to be the experts of the auditor who are going to assist the engagement teams, not only in understanding that, but also evaluating the impact of that information on the client, means on the company, as well as on the audit, right? So therefore, when we are talking about audit planning, so audit planning will also have this aspect, right? So this is another very, very important area for the audit planning. Okay, clear on this? Next. Now, what are the features or the advantages you will see in respect of this digital audit? So I think one of the aspects that we have discussed quite a lot is the improved quality of audit. I think it's quite evident. Yes or no? So when you use this automation, when you use the data analysis technology or techniques, so what will happen? So actually, we are not really looking at the sample. Why? Because if you run the tool on the population, so your entire population has been processed. So are you only limited to generation of a sample from the process when, sorry, from the population when you say you are processing the entire information? Not really. Maybe you have set up some parameters which you are running on the entire population and the exceptions are noted. Yeah, so this first level check, if you are able to do on the entire population and not only on the samples, so can we say that the effectiveness is improved? Undoubtedly. Yes or no? So now, if let's suppose you are making the use of automation, some of these techniques, tools, so of course, if the time taken is lesser, means the efficiency has been achieved. So if you reach that efficiency, so does it really help you as an auditor? Answer is yes. Right? So technology may require an element of upfront investment and it can be challenging to implement with regard to resources and the people. But the value once it is up and running is undeniable. Okay. Yeah. Next. Human dependency. Of course, when we are talking about automation, when we are talking about usage of some of the tools, softwares, so this human dependency, is it really getting decreased? Answer is yes. Yeah. So this usage of technology will always lead to minimization the manual intervention which is there. Right? Next. If you are able to achieve some of the things we have talked about, so does it really increase the transparency? Yes, new ERPs, tools, they have this audit feature available. Sorry, audit trail feature available. In fact, when it comes to the financial statements now, it's something which is a mandate. Yes, sir? Auditor is not only required to look into, but also specifically required to report on this aspect. Yeah. So the transparency as regards the information which is there, as regards the audit which is there, of course, this is increasing in line with the approach that we change, right? Now, moving further. Now, let's talk about understanding the IT environment. See, when you talk about the IT environment, it includes all the aspects related to the entity. Why? Because When you audit and when you talk about the processes of the company, so do you only go and check the finance process or maybe the process related to financial statement closure? No. You go and check the procurement, payroll, sales, okay, this inventory valuation, everything you will check. Why? Because each and everything will have impact on the financial statement. So the same goes here with the IT environment as well. Now, what are going to be the considerations when you go look into the IT environment? First, what are the applications which are being used by the company? To have an understanding of that. That knowledge is important because if you don't have that understanding, how do you go about it? How do you really go and audit that? So no, details of the IT infrastructure components for each of the application that you understand, right? Organization structure and the governance mechanism, which anyways is a, you can say, an essential part for the auditor to look into. Policies, procedures, processes followed by the company. Extent of IT integration. Now, if let's suppose an entity has got procurement, sales, finance, okay, so the systems they have been using, are those all integrated or not? Because in terms of the output that you generate, you will want to look into that piece as well. If let's suppose there's a service organization, now service organization is what? Say a third party, which might be supporting the entity in respect of say a particular activity or a particular process. Maybe for example, entity has outsourced a particular process, say payroll processing has been outsourced. Yeah, so that's again something which is a part of their environment, and whether that outsourced work is now taking place in an automated environment. What is that environment? How is that working? Yeah, so some of those considerations as an auditor you need to have in place. And of course, the risks and controls which are attached to that. Because these are some of the examples, anyways, we are going to talk about it. Now, key areas for the auditor. So I think we have just looked into the key areas already. Now, how do you identify the risk? So there again, your approach is going to be similar. Now, when it comes to the risk assessment, auditor will evaluate something which is significant risk for the auditor and something which is not a significant risk for the auditor. But in relation to that risk, which could be there, another important consideration is going to be what? First of all, to begin with the understanding. And the understanding that you have obtained. Okay, so what do? You will check as to what can go wrong. But at the first place, who will do this exercise? It's the management that will do this exercise. So the management has to do this at the first place. Once that is done by the management, it's covered by the management. That's when the auditor will go and evaluate the assessment of the management. Means something which has been done by the management, whether that is appropriate or not. Yeah. So whether that's been done in an efficient manner or not. Yes or no? So that evaluation of what the management has done by the auditor. Right? So that's something which is not only in relation to identification of the risk, but also the assessment of the risk. Okay. But now we are not talking about the manual part. We are only talking about the IT part, because that's how this entire part is comprising of. Now, what are some of the risks you may look into? For example, unauthorized access to data, unauthorized changes to the IT applications, possibility of IT personnel gaining access privileges, failure to make necessary updates in relation to IT applications, inappropriate manual intervention, data loss or data corruption. Yeah. There's a risk of system downtime. Yeah. So a lot of risks could be there, again, depending upon the flow of transactions in the entity. Yes or no? These are only some of the examples we have just tried to touch upon. Now, moving further. See, over here, because we are talking about the IT environment and the controls which are attached to that. Yeah. So that's why please understand that even though we are talking about this IT environment, that doesn't mean that this manual environment will be ignored. So that will also be covered. In fact, when you cover this part, you do this simultaneously. Yeah? So both the aspects you will cover together. Only then you will get the complete understanding. Right? Now, assessment of cyber risk. Now, what is the cyber risk, including the remote audit? So we can say cyber risk is an attempt to gain unauthorized access to a computing system or the network with the intent to cause damage, steal, expose, alter, disable, or destroy the data. Now, this is something and say it's a kind of risk for the organization. Yeah. Now, what are the most common types of cyber attacks? You may see ransomware. It's something which is very commonly known. Trojan. Then you have this mobile malware. Yeah. Phishing. Again, every now and then you get to read about, read about this. Yeah. These are very, very commonly found problems, sort of, for the entity. Correct? Now, as an auditor, what is important? As an auditor, there are two things which become important. Yeah. So first of all, what do you do? First of all, you will go and check as to whether in terms of the audit that you are looking at, what are the risks which the management has evaluated, basis which you will do your own assessment. Yes or no? Now, while doing that, you will also be including this category of risks. But does it mean that it's something you'll thoughtfully do? No. So let's try to put it in a manner that when you are understanding the process, so you are understanding the process in entirety, and the management will also have done that. So when you evaluate as to what the management would have done, that's where you will get to have this maybe a better understanding around this aspect. Right? Clear on this? Yeah. Next. Moving further, cyber security framework. Now, this framework includes how the management is identifying the risk, protecting and safeguarding its assets. Okay. So, for example, electronic assets from the risk. Okay. Now, this is one piece which the management is also required to look into. Now, in relation to this risk management process, which we just talked about, what do? You will identify the risk and you will also be doing the risk assessment, means its impact on the audit procedures. Basis which you'll also be planning your audit procedures in a way, means now what do you want to do? Means what do you want to check? to what extent you want to check that. Yeah. And while doing that, what is going to be the focus area for you? What is not going to be the focus area for you? So these are some of the things you'll want to look at. Yes or no? Now, talking about this aspect a bit more, when you are looking at the risk management process, now while doing that, you are including the risks related to this IT environment in a way, which will talk about each and every category of the risk which could be possibly there within the organization. Yeah. And all of those you will then evaluate as to what are the risks and what are the management controls which have been put in place. Those controls generally will be the IT controls. You can say the automated controls. Those may be related to the application. Those may be related to the IT general controls. Right? Next. Now, remote audit. Now, by the terminology only you will get to know when you say remote audit. Okay, so actually, in a way, we are talking about audit which is done in a virtual manner. Okay, when the auditor uses the online or electronic means to conduct the audit. So it could be partially or completely virtual. Auditor engages using technology to obtain the audit evidence. Say, for example, during Corona times, when this physical movement was not possible. So this remote audit was significantly used. So some of the information that you were to go and check. So how do you go about it? We'll have online meetings, we'll have online discussions. Some of the things which are required to be obtained means the information or maybe the supporting documents. What do? You'll get that online, right? So that was the way to go about it. And in fact, this is something which has increased quite significantly. Something which is more commonly used by the auditors these days. Correct? In terms of its feasibility, planning, now of course, the approach. So you can say it's nothing but an approach for the auditor. So this needs to be evaluated by the auditor as to where is it required, why is it required, and how would the auditor want to go about it. So where will the auditor consider about it? Of course, in the planning stage. Yeah. At times, there are some areas wherein the auditor may not want to go remote. And at times that may not be possible for the auditor. So this consideration, this evaluation is something which will form part of the audit planning for the auditor. Now there is one consideration related to confidentiality of the client data, security, data protection. Now to ensure that access to document sharing platforms should be sufficiently restricted and secured by encrypting the data that is sent across the network. Okay. And once that is reviewed, documented by the auditor, okay, so what should be done? It should be taken out so that the access to that remains limited. And once that is through, maybe the unauthorized access, the chances for that gets eliminated the moment you take it. Correct? Risk assessment, I think we have already talked about it. Now, what are the advantages and disadvantages you'll have? Of course, when you talk about the advantages, these could be quite significant. Cost This is no doubt one of the advantage, and the time that we take. So no, comfort and flexibility to the audit team as they would be working from any place, maybe the home environment or any place. They are not really required to go to the client place, maybe on a regular basis, on a daily basis. Okay. So of course, comfort is going to be there. Time required to gather the evidence can spread across several weeks instead of concentrated into a small period. So every now and then you can just reach out to the company over the call, over the email, and get the data. Otherwise, what do? You'll accumulate this. Maybe you've reserved 7 days. When you go to the client place, you get entire information. You collect that completely. Now, because you have that window. Otherwise, it may become challenging for you to obtain the information. So that sort of, can say, challenge goes off, because now you have a window which is available at all times. Auditor can get first-hand evidence directly from IT system, as the direct access may also be provided at times. Again, it varies from entity to entity. Widens the selection of auditors from global network of experts. Yeah. But there are some disadvantages in this approach. Now, what are those disadvantages? Due to network issues, interviews and meetings can be interrupted. So that's one. Limited or no ability to visualize facility culture of the organization, body language of the auditees. So that is again a very, very important aspect of the audit. And in fact, in the previous session, we have talked about one of the very important qualities of the auditor. That was about the HR piece. Okay. Management of the personnel. To have a discussion in person as against something that you do online can be very, very different. Okay, so that's why those gaps will continue to remain. If let's suppose we are going remote and getting onto the procedures as against doing that in physical. Opportunity to present doctored documents and to omit the relevant information on the part of the management, that increases. So when you are there physically, so the information which is produced to you, you are able to see that. But when you are receiving that online, now if that is altered, so do you really get to know about it? Answer is no. It becomes easier for the company if at all they want to do that. Yeah. Some of the information from the client side could be sensitive. When you go there physically, you are able to get onto a restricted environment in terms of the access. But when you are online, so therein that remote access may become difficult, and therefore it may not be allowed. So it could be one of the challenges to actually go and look into that information. Cultural changes for the auditor, lack of knowledge for local laws and regulations would impact the audit. Physical verification of assets, stock, which is extremely important, may not be performed. Now let's try to touch upon some of the emerging technologies. Good to see. Data analytic techniques. So when you talk about generating and preparing the meaningful information from the raw system data, using the processes, tools, techniques. So that's something that you call as data analytics. Again, a very, very important part for the auditor to get. So therein you have a lot of tools available these days. In fact, without these tools, some of the audits which are being performed, they may become very, very inefficient. Yeah, automated tools. Now we can say this robotic process automation, blockchain, machine learning, internet, AI. They are all examples of automation. And we all understand how important those are. So they can bring in a huge impact as far as the audit is concerned. So that's why that's very, very important for the auditor to have in place. Correct. Now, moving further, talking about the control considerations, or you can say the objectives of auditing digitally. Auditors should gain holistic understanding of the changes in the industry and IT environment. Yeah, so actually, that's anyways required to be done, but now because it's all centric to IT, so that's why we are saying that when you obtain the understanding or you want to update the understanding, so that has to be done in respect of ITs as well. Why? Because that's how you go and do the risk assessment, which will have an impact on the procedures. Auditors should consider the risks resulting from implementation of new technologies. How those risks may differ from those that arise from more traditional or the legacy systems. Yes or no? Auditors should consider whether digital upskilling or specialists are necessary to determine the impact of new technologies. To assist in risk assessment, understanding of the design, implementation, operating effectiveness of controls. Okay. What are the key steps you'll have? Maintain sufficient professional skepticism when reviewing the risk assessment. Understand the direct indirect effects of new technology and determine how its use by entity impacts the auditor's overall risk assessment. Understand how the technologies impact the flow of transactions. Assess the completeness of in-scope ICFR systems. Design a sufficient and appropriate audit response. Assess the appropriateness of management's processes to select, develop, operate, maintain the controls related to organizations' technology based on the extent the technology is used. Yeah. So some of these considerations, some of these tools that you're going to come across are very, very important in today's times. Okay, so now what we can do is, I think now we can look into some questions. Some of the things that we have discussed, I think you'll get more clarity once we move on to the questions. So just move on to questions. So let me just open this document. All right, there we go. Let me just share this document with you. Kanya, a CA final student, is of the view that cyber risks are issues of IT. Now, cyber risk we discussed. What is the cyber risk? So these are the issues of IT. So the thought process is that it's something which is related to the information loss to an entity. Okay. Means it's all limited to, say for example, if there's a cyber risk, so it's a matter related to the IT environment. So what is going to happen? Maybe some data will be corrupted or maybe some data will not be available. She also feels that many cyber attacks are not directly targeted at financial systems. So basically, understanding is that when you talk about these cyber attacks, they're not going to have any impact on the financial statements. So that's the thought process. So therefore, they do not pose any sort of risk of material misstatement to the financial statements. Okay, so that's the thought process. Now the question arises as regards this thought. So can we say that this is appropriate? Now let's try to understand this. Okay. So when you talk about cyber risks are not an issue of IT alone. See, in this case, first of all, what do we need to do? We need to understand that we are looking at the company as a whole. Okay. And when there is a cyber risk, is this only going to impact the IT? And therefore, because it's only impact the IT, therefore, it will not have any impact on any other process. Yes or no? So the question is that this thought process seems to be clearly wrong. Yeah. To have that understanding is not appropriate. Why? Because it's more of a business risk. And how an effect on the whole business organization needs to be evaluated. Why? Because if it's a risk on the business, so whole of the business may get impacted due to this. Right? It affects the entity's reputation and can lead to many other consequences. For example, regulatory aspects may get impacted. So there are a lot of regulations which require the companies to have a control in place in relation to that. And due to some of these things or some of these risks, some of the regulatory aspects may get triggered. That will involve the regulatory costs in terms of penalties, etc. Business interruptions. Of course, something which is going to impact the business, if let's suppose that cause a business interruption. So this can always pose a challenge, operational challenge for the organization. Yeah, always. Yeah. Data loss. Of course, it's there. Reputational loss. That's automatically linked to this. That's bound to happen the moment you have this situation. Yeah. Litigations are going to arise due to this. That's again something which could be very well linked to this. Ransomware. Something which is very, very commonly found. Okay, so even if you look at some very small setups, Not only limited to the large organizations. When you talk about some very small setup, therein you have this risk of what? Ransomware. Intellectual property theft, which may not only take the competitive advantage, but we may also result in any impairment or impediment charge because of the loss of IP. So this is also a concern. Incident response cost, which could be for investigations and remediations. Breach of privacy. If personal data of a consumer is hacked, it could have a significant impact on the organization. Yes or no? Yeah. Fines and penalties. These are going to be there, which is again a concern. It may happen that many cyber attacks are not directly targeted at the financial systems. However, access gained by the attackers may provide them ability to manipulate or modify the financial records. Yeah. So in a way, even if you say that these are not directly impacted, the moment this access is passed on, so this information can always be tampered with. Modify key automated business rules, right? Modify automated controls relied upon by the management. Yeah. Further, the auditor should consider whether the cyber risk, like other risks, represent a risk of material misstatement to the financial statement as a part of audit risk activities. See, when the risk assessment exercise will be done. So when do you do that? At planning stage. Now, while doing that, auditor needs to consider what? Every risk involved and evaluate that whether it's going to be significant or not significant. So over there, the significant risk will also be considered. Yes or no? Focus is always on what? Understanding the risk. Understanding the risk, which is affecting the entity and the actions being taken to address the risk. Why? Because once you do this risk assessment, so what is the next step? Yeah, so what do you do in respect of this risk assessment? Is the procedures you plan. How do you mitigate the risk? Okay, how do you address this? So how do you address that? We will address that through procedures. Yeah, so these procedures are going to help you address that. Okay, next. Now moving on to the next one. So let's look at this. A company is planning to use robotics process automation, RPA, to streamline its hiring process. So basically, we are talking about hiring process in a company. Earlier, the company used to hire from the campuses of various management institutes, leading to high recruitment costs, inefficient hire yield, and that used to result in lack of diversity. Now the question arises, when you are talking about this robotic process automation, okay, so this sort of technique, how this can be used to automate the hiring process. Yes, that's one part to this. So what is the objective? To automate the hiring process. How do you go about? So that's one. Number two, list out tentative future steps. What could be the likely benefits of using RPA in the hiring process? So how do you use this? Number one, so some steps you will talk about, and of course, what are the likely benefits if let's suppose you that. See, if let's suppose you'll do that, you'll only do that if there are some benefits. Yes or no? So this cost benefit analysis, whenever you'll do something which is going to be beneficial, that's something which the auditor is always going to pick up. Yeah. Now let's look at this. Whether this RPA can help streamline? No doubt. Yes. See, this is a technology which is always going to help. We bring in the efficiency. Okay. Now, what are the steps you may have in place in respect of this? Place the advertisements on social media or career advice sites. That's one. Okay. Link redirects candidate to a career site. Third, career site pulls information of a candidate, which is again very commonly used. An algorithm scans applicates for desired and suitable roles. So now what are you trying to achieve? You are trying to remove the manual intervention, remove the manual effort. If you do that, so will it lead to a time saving? Undoubtedly. Undoubtedly. So cost is going to be saved. And of course, the effectiveness is going to improve. Because if let's suppose you have a parameter, let's suppose you have set up an algorithm basis which what do? You are scanning the applicants. So now if you run that and the output that you generate, so basically you are able to achieve something that you are trying to get out of. So if you are able to get the desired output in an effective manner without the manual efforts, okay, so does it really help you? Answer is yes. Selected candidates may be asked to play online games to assess their skills. A certain percentage of those applicants are called for a video interview using an interview software. That can also be done. Now, the next question is, what could be the likely benefits? I think we have already touched upon this aspect, but let's look into this. What are going to be the likely benefits? So this will undoubtedly reduce full-time effort in work. Provide a wider assessment range. See, manually that you do something, and if you are able to do that through tools, through systems, So you can always widen the horizon, reduce the impact of recruiter biases. Yeah, because if let's suppose you have a system or a tool in place, so that bias is quite effectively reduced by increase the efficiency of mapping of interested candidates, no doubt. Yeah, so this can be quite easily be achieved. Of course, when you do that through systems, are you able to save on some of these costs? Yes. So when you are able to save the time significantly, you will definitely be able to reduce the costs significantly. Yeah. If you are able to achieve this wider assessment range, your higher yield will no doubt improve, increase your time to hire. If you are able to process this information faster, maybe more voluminous data, so your time to hire is significantly reduced. Okay, and something which you were not able to achieve earlier means to increase the diversity. Will you be able to achieve that now? Answer is yes. Now you're able to achieve that. Okay, so some of these tools, therefore, in any ways, when you talk about it, do they really help the auditor? Answer is yes. Yeah. Next. So we have this concept called as IT dependencies. Now, when you talk about IT dependencies, so these also arise due to system generated reports. Number one, interfaces. Okay. Now, how do such IT dependencies arise first of all? Let's try to understand. So, how do they arise? Number two, why is it important to identify IT dependencies to develop an effective and efficient audit approach? Yeah. So why do they arise? How do they arise? Sort of number one. And why is it important to identify the IT dependencies? So that's another important consideration. Okay. Now let's look into this. See, when you talk about IT dependencies, they are created when IT is used to initiate, authorize, record, process, report transactions, say any financial data for inclusion in financial statements. So that's when you have these IT dependencies. Okay, that's how actually you reach this stage. So when do you get the dependency here? So of course, when you are doing this, or you're doing any of them. Yeah. Now, system generated reports. Okay, so when you talk about system generated reports, so these are the information generated by the IT systems. Okay. These reports are often used in entities execution of a manual control, including business performance reviews, or maybe source of entities information used by us when selecting the items for testing, performing substantive test of details, performing substantive analytical procedures. Okay. So there are a lot of reports you come across in a business environment. And in fact, these days, because we are talking about the IT environment at every place, most of the data which the management will have, the management will process. So what do they have? They will always have these things in place. Yes or no? Now, these system generated reports basically could be in relation to the execution of manual control, or maybe the source of the entity's information. Now, what are interfaces? So let's talk about these interfaces. These are the programmed logic that transfer the data from one IT system to another. Say, for example, an interface may be programmed to transfer the data from payroll subledger to the general ledger. Okay, so that's something which we call as an interface. Okay, which is trying to bring in the connect. In this manner, IT dependencies arise due to system generated reports and interfaces. So this is what is leading to IT dependencies. Now, when it comes to the IT dependencies for an organization, now the next aspect is, why do you go identify that? Now, for this IT dependency in an entity to be identified, so this will help in terms of what? So if you are able to identify that, you are also able to identify the entity's reliance upon IT. So that's something you will be able to achieve. Number one, understand how IT is integrated into entity's business model. That's something you will be able to then maybe understand a bit more. Yes or no? Because if let's suppose you are talking about the IT environment, something that you are looking into it, which is related to IT dependency. So when you go understand that, you'll also be able to understand whether the entity's reliance upon IT is there or not. And how's this entire system set up in an organization integrated? Identify the potential risks arising from use of IT. Identify the related IT general controls and enable us to therefore develop an effective and efficient audit approach. Why? Because if you are able to get onto this understanding level, as an auditor, what do you try to achieve? That's what you try to achieve, the understanding level. So that's the understanding level. Because the better the understanding, better the procedures you will be able to get on. So once you reach that stage, you are able to get onto that. So will it lead to effective and the efficient audit approach? Obviously, because only then you will be able to get onto that part in a better manner, in a more effective manner. So that's why it becomes all the more important for the auditor to look into. All right. So now, before we move further, I think what we can do is we can take a break now. Ashok, we can take a break now. Ashok, we can take All right, so now moving further, we'll try to look at some more questions now. Okay, so I'll just share the document. Yeah, so let's look at this next one. Excuse me. Emerging technologies. So they can bring great benefits. Yes, some of the emerging technologies that we have talked about. But they also come with a varied set of substantial risks. So at one place, we are saying there are benefits. At the other place, we are saying there are substantial risks alongside. Give some examples of technology risks of digital system and the control considerations to consider while assessing the technology risk. Okay, so what are we required to look into? First, examples of technology risk of digital system. So you can say that's one. Two, so that's about control considerations to consider, or the control considerations you will have while assessing this technology risk. Okay, now let's look at this. Now, what are the examples? So some examples of the technology risks where the auditors test the appropriate controls for relying on the digital systems. One, relying on systems or programs that are inaccurately processing the data, or say processing inaccurate data, or both, right? So either the data is processed in an accurate, but it's inaccurately done. The process is done, but inaccurate data is being processed. So that's a technology risk. Number two, unauthorized access to the data that might result in either the destruction of the data or say unauthorized changes, which may bring in improper changes to the data. So that is also a technology risk, wherein we may be talking about recording of unauthorized or non-existent transactions, or inaccurate recording of transactions. So specific risks might arise when multiple users access a common database. Possibility of information technology personnel gaining access privileges beyond those necessary to perform their assigned duties, thereby leading to insufficient segregation of duties. So that is again one of a very big risks you may have. Yes or no? So that can also pose a big challenge. Unauthorized or erroneous changes to the data in the master files. So that is also a possibility. Correct? Unauthorized changes to systems or the programs. That is also a risk you may have. Failure to make necessary or appropriate changes to the systems or programs. Correct? Inappropriate manual intervention. So that can also be there, which one needs to look into. Yeah. Potential loss of data or inability to access the data as required. Risks introduced when using third-party service providers. So what are those risks? So of course, those risks may be the technology risk as well. And of course, cyber security risk is something that we have talked about quite a lot. Yeah. So all of these risks are something which the auditor needs to put in the consideration, because of course, when you talk about these risks, somewhere or the other, they are going to impact the auditor. Yeah. Because they are very much a part of the process. They are very much impacting the activities. So that's why it's important to bring them into their consideration. Yes or no? And if let's suppose you don't do that, then it's all about maybe inappropriate risk assessment. Yeah, so some of these things that we talk about, they are all very much part of this planning process. Why? Because at the planning stage, you have this risk assessment. And for the risk assessment, how do you address the risks which are there in the organization? That's something which will lead to your execution. Yes or no? Because something that you plan, that you go and audit. Otherwise, how do you perform the procedures? That's how you design, and that's how you perform. So that's why it's an important consideration for the auditor, without which what will happen? Lead to problems. Yes or no? Next, let's look at this. KLM Industries Limited. It's a mid-sized company. It's engaged in consumer electronics manufacturing. Okay. So you can say it's a manufacturing company. It has recently undergone a major digital transformation by implementation of fully automated production tracking system. Okay. Undergone major digital transformation by implementation of fully automated production tracking system. Cloud-based accounting software. And you have a blockchain-based vendor payment system. Okay. These changes were introduced during the financial year 24-25. Yeah. Management believes that these technologies will increase the efficiency. Number one, reduce the chances of errors, of course, yes. And hence have revised the risk assessment accordingly. Okay, so it's something which the management has looked into. Why? Because they have brought in these systems. Okay. Now, you happen to be the auditor of this company. So as an auditor, now the question arises, when you go and audit this, what is going to be the most important aspect of audit for you? As we have discussed, it has to be the risk assessment. Yes or no? And when you do the risk assessment, you will look at the risk assessment which the management has also done. Therein, you will find that the management has revised their risk assessment. Yeah. So anything which has led to the revision in the risk assessment of the management. So how is that important? Is that important or not? Yeah. So all of these factors one needs to look into. Yeah. Very, very important on the part of the management. Next, as an auditor, what steps should you take to evaluate the impact of such technology changes on the company's internal controls and financial reporting? Yeah. So what are the steps you should take? So that's something you are now required to comment. Okay. Yeah. So clear on this? Now, let's look at those steps you go and look into as an auditor. Maintain sufficient professional secretism. In fact, you remember when we were going through this discussion, we looked into some of these steps. Yeah, so that's the same thing we are now required to comment upon or look into as to whether this will really fit this or not. Yeah. So now, maintain sufficient professional skepticism when reviewing the management's risk assessment in respect of these new systems. Okay, so that's one part to it. Yeah. Understand the direct and indirect effects of new technology and determine how its use by the entity impacts the auditor's overall risk assessment. Yeah. Understand how the technologies impact flow of transactions, assess the completeness of in-scope ICFR systems, and design a sufficient and appropriate audit response. Again, a very, very important consideration. Yeah. Assess the appropriateness of management's processes in respect of what? To select, develop, operate, and maintain the controls related to organization's technology. Yeah. Clear? Next. Now, XY Bank, headquartered in New York, so it offers a broad range of financial services. So we are talking about a bank now. So this bank will have asset management, commercial banking, investment banking, treasury and security services. Okay. 5 Indian banks in partnership with XY Bank provide a comprehensive range of banking services and the products encompassing retail banking, corporate banking, international banking, and you have other financial services. All these banks have been significant contributors to the digitalization of banking services in India. Okay. Under the pilot program, now do we have Indian banks will open on-chain Nostro accounts with XY Bank branch in the gift city. Okay, so that's a pilot program, you can say, which is Going. Then you have this blockchain based system which is expected to facilitate instant 24/7 settlement between the accounts held at the US bank. So they are bringing in this blockchain based system. Essentially, it will create a private intra-correspondent banking network, redefining the traditional banking hours, enabling seamless money transfer. Okay, now in this case, let's look at some of the steps you will follow in respect of the audit. Now, basically, we are talking about the blockchain. So now, how do you go about it in terms of performing the procedures? Yeah, so that's the subject matter. Yes or no? First, obtain a comprehensive understanding of blockchain-based file group, wherein you look into its objectives, scope, key processes. So obviously, whenever you go audit something, what do you do first? That's the thing you will do first. Yes or no? Yeah, that's the first thing you'll always have. Correct? So it's about obtaining the understanding. Next, review the partnership agreements, contracts, legal documentation, as around what? Relationship between those Indian banks and XY bank. Why? Because they are sort of connecting. They will have laid out each and everything in terms of the terms and conditions, uh, procedures which are required to be followed. All of those operational aspects as well. Yeah. So that's important because if you were to audit something, so you'll obtain the understanding. And to obtain the understanding, you'll have the understanding of underlying documents as well. Identify the specific blockchain technology used, its functionalities, underlying smart contracts. Okay, so that's the next step you'll have. Next, assess internal controls. So review the policies and the procedures related to on-chain nostro accounts, settlement processes, money transfer mechanisms. All of these things become important, right? Next, assess the governance framework, risk management practices, compliance procedures established by Indian banks and XY Bank. Review the security measures. Now, this is again important because that is again a very essential element of the blockchain technology you will come across. So you'll assess the encryption methods, cryptographic key management, and secure transmission protocols used for data protection. Review the measures taken to prevent unauthorized access, cyber threats which could be there, potential vulnerabilities in the blockchain network. Okay. Next, test the transaction validity and accuracy. Now, this is again very, very important. validate the transactions are recorded and settled accurately on the blockchain, ensuring adherence to relevant regulations and contractual obligations. Yes or no? Yeah. So obviously, when you are looking into the transactions, it's all about some of these assertions you will want to get into. Perform reconciliations. Now, what could be the next procedure? Perform reconciliations between on-chain Nostro accounts and corresponding accounts held at XY Bank to confirm accuracy of balances and transactions. Yeah, because any sort of unreconciled balance you will want into, of course, the aging, the reasons, why it's actually in place. So those considerations become important on the part of the auditor, right? Next, evaluate compliance and regulatory requirements. Again, very, very important. Review the documentation and procedures related to customer due diligence, which the entity would have performed. Transaction monitoring, reporting obligations. They are again important. Ensure that the pilot program adheres to industry specific standards and best practices. Assess business continuity and disaster recovery. Okay, now evaluate the adequacy of backup and the recovery procedures which could be there. Redundancy measures, failover mechanisms to ensure uninterrupted operations. Test the effectiveness of these plans by conducting simulations, examining historical incidents, and response procedures. Okay. Report findings and recommendations. Provide recommendations for improving the internal controls, security measures, compliance procedures, overall efficiency and effectiveness of the pilot. Communicate the audit results to the relevant stakeholders, highlighting the areas of concern, suggesting the remedial action. Because only then things are going to improve. Yes or no? Yeah? Clear? All right. So now, before we move further, maybe some of the more questions that we pick up, what we can do is we can just now look into some of the aspects related to this other topic that's about ESG assurance. Okay, so now let me just move on to that document. Just give me a minute. All right, so here we go. All right, so talking about this ESG assurance. So we can say it's relatively new. Okay, of course, 1 year old, 2 year old. So it's been some time. but it's an evolving area, something that you call as ESG. So we'll talk about this ESG as to, what is this ESG? And then, of course, you have this sustainable development goals. Now, what is this concept? What is actually required to be done? And as against this, now what is it that the auditor will have to do here? So all of these aspects we'll try to understand. So I think what we can do is we can just maybe look at this, some background around this ESG sustainability reporting. So that will give you some insights as to what is the context here. CAI was keen to understand about sustainability reporting by corporates in the light of mandatory regulatory requirements. One of his corporate clients was required to do such reporting. And there was also an assurance report on that. So he wanted to familiarize himself with terms like sustainability, sustainable development goals. So what do you mean by sustainable development? So you can say it means development that meets needs of present without compromising the ability of future generations to meet their own needs. Okay, so we can say a call for an action to end poverty. Say protect the planet, improve the lives and prospects of everyone everywhere. So that's the consideration we have. Yeah. Sustainability reporting frameworks. So these have evolved now, wherein we have this concept called as ESG. Now, ESG stands for what? Three things: environment, social, governance. Now, as around this, there's been a lot of debates in the past. So let's try to understand the context here. What is their object? To make money, to earn profits. Yes or no? So there has always been a discussion that alongside these companies also need to have a responsibility towards the society, towards the mankind. Yeah. So if they are able to get something, they should also be able to maybe contribute a part of that. For example, when you talk about this concept of CSR, I think most of you must be familiar with that. This corporate social responsibility, wherein the companies are mandatorily required to work towards a cause, which is basically the public welfare. At times, you also come across businesses that are voluntarily doing this. Okay, so it's not only a mandate, the businesses are voluntarily doing this. Okay, now that's where this ESG or this reporting requirement comes into the picture. So it mandates, so you can say now we have these regulatory requirements. Now, what do they require? So if let's suppose there's a company which has done something around the environment, around the society, around the governance, so they now need to report that. So what is it that they have done during the year? Okay. So there are some principles which the companies are required to consider, basis which they can do this evaluation. Yeah. But it's a mandatory disclosure which has been which has been, you can say, put in place. So over here, please also try to understand that we are not talking about the financial statements. So actually, we are going beyond that. So you may be thinking that when you talk about a disclosure or this reporting requirement, yes, of course, but it's something other than that. It's not a part of that. So whether it's there in the books or not, that's a separate matter. Whether it is already forming a part of financial statements in some way or other, that's a separate thought process. But basis some of those criteria, some of those guidelines, some of those principles the company has done, they are required to report upon that. Yeah. Now, is it mandatory for each and every company? Answer is no. So you can say this is getting implemented in a phased manner, starting with top size companies to a lower level. But of course, some of the small size companies, even the mid size companies, they are not required to get into this because objective here is again what cost benefit analysis. So for the small companies, it may be very, very hard to get on aspects during the early stages or maybe the stages of the business at which they are right now. And to get onto that reporting doesn't make sense. So that's why you have the top companies which are basically falling within the purview of some of these requirements. Okay, now ASG is something that we have talked about. Now, for the ESG, so you can say there are some pillars which include the elements as around this ESG. So in terms of environment, what has been done towards the climate change, towards protection, conservation of natural resources, towards this pollution, waste management, environment opportunities, towards the social, means towards the human capital, what's been done, okay, towards the stakeholders, opposition, it's been done, governance, what is that the company has been doing across this. Now, this reporting requirement in respect of the companies is not only qualitative, it is also quantitative at times. So you can say there is a criteria which has been put in place, basis which the companies are required to report upon that. Okay, now all of these are actually, you can say, some of the global frameworks which are there. So those are also getting replicated, or you can say being a part of those frameworks at times at a global level. So those requirements are also something which the country will have to look into. Yeah. So now, as regards this reporting requirement and some of the things which are required to be put in place, so what I'll try to do is, I think, to get an understanding of what is really required to be reported upon, how is that required to be reported upon, and what the companies are actually doing in this respect. What we can do is we can just go look at the live annual report. Okay, so now, in the annual report, the separate reporting requirement is covered by the companies. Yeah. Before that, I'll just try to give you a brief background. Of course, the context we have discussed. In India, MCA took the initiative to guide the corporates towards responsible conduct and sustainable future by issuing CSR voluntary guidelines sometime in December 2009. Yeah. MCA further issued additional guidelines known as National Voluntary Guidelines on Social, Environmental and Economic Responsibilities of Business, NVGs. And then, of course, it kept on getting evolved. In 2012, SEBI. So when we are talking about SEBI, of course, we'll be talking about the listed companies. SEBI mandated top 100 listed companies to file a report as around business responsibility. So you can say there were some criterias. 2015, this business responsibility report became part of LODR. So you can say the regulations of the SEBI. So that's where it was incorporated. In 2017, SEBI recommended, okay, so wherein they issued a circular advising top 500 listed companies to prepare this BRR and to adopt this integrated report on a voluntary basis starting from financial year 17-18. Now, please understand it was a recommendation. And in 2019, MCA revised those national voluntary guidelines. 2019, this BRR, something that we have been discussing, BRR, it became mandatory for top 1000 listed entities. Now, 2021, we saw this another development. What was that? SEBI introduced new reporting requirements on ESG parameters called as BRSR. Now, instead of calling it as business responsibility statement, they brought in one more aspect, business responsibility and sustainability report. Okay, wherein the companies, they were required to disclose. So this BRSR seeks disclosures from the listed entities on their performance against 9 principles of this national guidelines on responsible business conduct, and reporting under each principle is divided into essential and leadership indicators. So we'll try to look at that part as well. When you talk about these essential indicators, these are required to be reported on a mandatory basis. Okay, so it's a mandate. While reporting on leadership indicators is voluntary. Yeah, but generally you see, we are talking about the large companies looking into the governance framework, being a part of this ESG only. So the companies do get into this aspect. Okay. Now, with regard to some of these, you can say regulations. So ICAI also took the initiatives. In Feb 20, ICAI constituted Sustainability Reporting Standards Board. Okay, for example, you have this Accounting Standard Board, Auditing and Assurance Standard Board. So similar to that, you have this Board on Sustainability Reporting Standards. Okay, ICAI also started a certificate course on sustainability development goals, business responsibility report, integrated reporting. Yeah. In the last 2 years, ICAI issued publications on standard on assurance engagement. So that's the assurance engagement on greenhouse gas statements. Background material on BRS. Sustainable development goals means accountants creating the sustainable world. Okay. Then when you talk about these BRSR, so reporting under BRSR is mandatory from financial year 22-23. See, up to 21-22, it was voluntary. After that, it's been made mandatory. And it contains 3 sections. So I'll get into those sections also in some time. We'll look at those sections. And of course, then you have these principles, basis which some of the disclosures are required to be put in place. So we'll get on to those 9 principles as well. Now let's talk about assurance in this respect. So what is the assurance now? SEBI has currently started with top 1000 listed companies. Okay, so when you talk about this BRSR reporting by the companies, somebody will also be examining that. Okay, that's where you have this assurance. As of now, so what do we say? Top 1000 listed companies. But very soon, remaining listed companies would also be required to comply with the provisions of BRSR. As of now, it's only top 1000 listed companies. Okay. ICAI has also issued standard on sustainability assurance engagements, something that we talked about. Yeah. And some of the steps, of course, you'll have in relation to that. Okay. Some of those principles you'll be looking at. Yeah. So we have this case study around this, which I'll want to touch upon slightly later. As of now, what I'll try to do is I'll now get into that annual report. Just give me 1 minute. Let me just get on to the annual report. Now, in this annual report, some of these disclosure requirements that we have, we'll try to look into that. Okay, just give me a minute now. Yeah, so there we go. Let me just get on to this document now. So I'll just share this document with you. Now, just for your understanding, maybe you can also access this document. Okay. So some of the top listed companies that you pick up, so you can just download their annual report and therein you can get to see this. Maybe later on you can just go through this complete disclosure in detail. That will give you good insights about what this reporting requirement really is. Okay. So as of now, what I'll do is I'll also be touching upon that just to give you a glimpse of what is really required to be done here. Okay. So now let me just first of all get on to this BRSR. Okay. So this business responsibility and sustainability reporting. Okay, so there we have this business responsibility and sustainability report. Now, as regards this report, what do you find? Now, it's the report which has got 3 sections. Okay, remember the 3 sections we talked about? Now, what we will try to do is we'll just try to look into each and every section and try to understand as to what is it the company has covered over there. Now, some of these things which the company has disclosed, please understand it's a mandatory requirement. Yeah. So the section A talks about general disclosures. Yeah, so we have picked up this company TCS. So now in terms of general disclosures, what are they required to cover? Details of the company, the SIN number, name, year of incorporation, registered office, corporate office, email, telephone. Yeah. So some of the very basic information that you can see. Name of the assurance provider. Now, why do we have the assurance? Because it's top control. Remember, assurance is mandatory, and therein again there is a phased manner. The way this assurance comes into the picture. Then continuing on the same section, what do we have? Products or the services. So details of business activities, products or services sold by the entity. Yeah. So some of these disclosures they are providing. Then operational details, number of locations where the plants and or operations or offices are situated. So they have specified at national level, they have one plant, 126 offices. International, there's no plant, 185 offices. And then, of course, they have also given the split region wise. Market served by the entity. Okay, which all markets they have been serving, national, international, number of countries. What is the contribution of exports as a percentage of total turnover? And a brief on the types of customers. The company says the company works with leading corporations across the world. Typically, Fortune 1000, Global 2000 corporations in the public sector. In India, it works with departments of Government of India and various state governments, systemically important entities, and the private sector as well. Then they are giving the details about their employees. Okay, so over here, when you look at the information, so it's given basis the gender, male, female, how many of those are permanent, how many of those are other than permanent. So this sort of information is provided. Okay. Then these differently abled employees. Okay, so that information is also required to be provided, which the company will have. What is the participation, inclusion, representation of women on the board as regards their KM? So that information is also required to be. What's the turnover rate for the permanent employees? So here on a split for male female is covered by the entity. Next, details of some of the group companies in terms of holding company, subsidiary, associate. Yeah. So they have given a reference of another document, which is a part of this annual report. And this annual report is something that you call as integrated annual. Okay. CSR details. Now CSR, you can see, is a part of this now. Yeah. It's very much a part of this. Then transparency and disclosure compliances, complaints or grievances on any of the principles. Remember, there are some 9 principles which are being talked about. On any of those principles which are there under the regulatory framework, if there are any complaints or discrepancies, those are required to be reported here. Okay, it's more of a disclosure. So it's about providing the information in a transparent manner for the stakeholders to know about as to how the company has been contributing towards this. Yeah. Overview of entities material responsible business conduct issues, if at all they have. So there again, what the company is doing is company is saying in the MDA analysis, which is a part of this annual report, you go read the section ERM. Therein all of this information has been provided. So can that referencing be done? Answer is yes. Avoid the duplication. Huh? Yeah. Now, moving on to section B. Now in section A, the information that we discussed was all about some basic information as regards the company. Okay. Now, talking about the section B. Now, what do you have in the section B? Over here, company will be talking about the structures, policies, processes that it will have as aligned to 9 principles of business responsibility. Okay, now this reporting sort of, or the disclosures that you will see, they will be principle wise. So each and every principle they will have to cover and report the information about it. So for example, the first principle says businesses should conduct and govern themselves with ethics, transparency, accountability. Okay. Now what we will do is we'll also look at some of these disclosures. So let's look at the principal one. So you can see what are the disclosures provided by the company. So there are some set of questions in this section which the company is required to answer principal wise. Whether your entity's policies cover each principle, its core elements. So they are saying yes. So they are not saying yes for all. They have to say yes for each and every principle. So you can say there are 9 ticks individually. So that's how the reporting is required to be done. Has the policy been approved by the board? Yes. And then the company has given the web link wherein you can go and access the policy. Moving further, whether the entity has translated the policy into procedures. So they are saying yes. Okay, moving further on this, then there are a lot of questions that will follow. Yeah, and the company is talking about it. Okay. Now, this is how various questions will keep coming. I'm not just flipping through each and every question, but each and every question will have to be looked at principle wise. Okay. Now, moving on to section C. Now, in section C, what the company is required to do is company is required to give some disclosures, but now these disclosures will be given basis the principle, but for every principle they will give the disclosure first, or you can say for each disclosure they will give the disclosure, unlike the section B. So section B, they were picking a question, answering for all. Now they will pick up the principle 1, answer the questions for this principle 1, then they will pick up principle 2, answer the questions for principle 2. So that's how these questions are now required to be, or you can say that's how now this information is required to be provided. Okay, so now let's look at this principle 1. Let me read this again. So in principle 1, businesses are required to conduct and govern themselves with integrity and in a manner that is ethical, transparent, and accountable. Okay, so now in this case, what do you do? So some of the information which is required. Percentage covered by training and awareness programs on any of the principles during the financial year. Now, when you say any, we are talking about first principle now. So the company is giving the information that at a board level, total number of trainings, 34. Topics or principle covered under the training at its effect, all. Percentage of persons in respective category covered by awareness program, they are saying 100%. For KMP, again 100%. For employees other than board and KMP, they are saying 29,740 employees were there. 98 have covered. Means 98%. Okay. Now, similarly, for this principle, you will see various questions are given and various sort of disclosures are required to be covered. Now, in this case, please again, if you remember, for section C, the information is divided into 2 categories: essential indicators and leadership indicators. Remember, the essential indicators were mandatory, leadership indicators were made voluntary. But some of the companies like TCS, so having good governance. So what do? They are covering these leadership indicators as well. Okay, now moving on to principle 2 now. So principle 1 is done. Now principle 2. Businesses should provide goods and services in a manner that is sustainable and safe. Now in this case, what is it the company is doing? Once again, they have a set of questions, essential indicators. Then they have this set of questions for leadership indicators. So that's how this entire information is captured. Okay, so maybe one more principal will pick up and look at the questions. So I'm just trying to flip through to help you understand that this is how this reporting is done. So it's a very wide, comprehensive reporting. So of course, we'll not be able to look at each and every item here, and that's not really the objective. Objective is to get on to the principle. So the way the company is doing this. So it's very much a part of the reporting that we have been looking at. Okay, so it's all included there. So we are looking at principle 1, 2, 3, 4. Now we have reached this principle number 5. So in principle number 5, what is the principle? Businesses should respect and promote human rights. Now for the essential indicator, employees who have been provided training on human rights issues and policies provide the information. How many were permanent? How many were other than permanent? So the company has given the employee count. Okay. And for the last year, company has given the comparative. Details of minimum wages paid to the employees. So how many total employees were there and equal to minimum wage, more than minimum wage. So this categorization they have done. Okay. Then last year. Details of remuneration, salary, wages in the following format. For male, female, and for the board of directors, for the KMP, for the employees other than board and KMP. So that's how the information has been presented. Clear? Yeah. So now, basis this, what will happen for each and every principle? This disclosure has been covered. Yeah. So now what I'll do is, so I'll just, if I keep flipping through this, okay, so I think we are still on some of the principles. Just a minute. Yeah, so still the same disclosure is going on. Okay, so we are very much on the reporting part even till now. So that's why I'm saying it's quite comprehensive. See, so far we have only covered 6 principles now. So then we have this principle 7, then principle 8, and then of course we move on to principle number 9. Now, once you have this principle 9, okay, once you have this report covered, now who is giving this disclosure? So if you call this as a report, it's a report of the management. Yes or no? It's not something which the auditor has done. It's the management who has prepared this. Now for a certain category of the companies, as we discussed, for this reporting, which we just looked at, yeah, assurance has also been made mandatory. Now for this company, assurance is applicable. So now what do you see in case of assurance? So let's try to look at the assurance report. Now you may be thinking that what is this assurance report? How is this different? And how do we really understand about it? So in a very broad manner, you can say, when you go look at the auditor's report on the financial statements, what is the underlying? Financial statements happen to be the underlying for which the audit has been performed, over which report is being issued. Now in this case, what is the underlying? This BRSR is the underlying. Okay. And for this BRSR, for which the examination has been done, which has been provided by the management, but which has been examined by the practitioner, you can say the auditor in a way, a report is being issued. So that's the report now we are going to look at. Okay. So here again, the structure is quite similar, not exactly similar to what you see in case of other statutory audit report, for example. Okay, so first of all, you will say independent practitioners reasonable assurance report, because it's not required to be given by the statutory auditor, right? Reasonable assurance, because that's the scope. So that's why you are, to whom is it addressed? To the board of directors. So that's where it's required to be addressed. So that's where they're saying to the board of directors of the company. Then assurance report on BRSR, core disclosures. Assurance report on BRSR core disclosures called identified sustainability information of the company. And this identified sustainability information there, given the abbreviation ISI, is included in the BR and SR report section in the company's integrated annual report for the periods. They have also given the period for which it's covered. So it's for 25-26, means that financial year. Now comes the opinion. Now the practitioner is saying, we have performed reasonable assurance. Remember, in case of statutory audit, auditor will say we have performed the audit. So now they're saying we have performed reasonable assurance engagement on whether the company's sustainability disclosures in the BRSR core format for the period so and so have been prepared in accordance with the reporting criteria or not. Yeah. So then they have put down the reporting criteria, because that's the reporting criteria which the companies are required to follow. Okay. Then they are saying, in our opinion, companies information is in the BRSR section is prepared in all material respects in accordance with the required criteria. So I'll not read all of these regulations. You can say broadly in accordance with the required criteria which was required to be sort of covered. Okay. Next, basis for the opinion. Now, once the opinion is given, what do? You'll give the basis for opinion. Yeah. So they are saying we conducted our engagement in accordance with international standard on assurance engagement. Assurance engagements other than the audits. Okay, so they are quoting that our responsibilities under those standards are further described in our responsibility. So when you move on to the next section of this report, our responsibilities, you can go read that. So that's what they are saying here. Next, they are saying we have complied with independence. Again, very, very important for any practitioner, because it's assurance. So independence is required, ethical requirements. Yeah. So all of these things they have specified that this is something we have looked at. Okay, next. I'll just flip this part. They are saying we believe the evidence we have obtained is sufficient and appropriate. This is exactly what you see in case of statutory audit report also. Correct? Other information. Now, because this reporting, this BRSR reporting, okay, this sustainability information reporting, it's being issued with various other reports. See, annual report is a big document. Yeah. Can you see this? So if you look at this annual report of the company, it's running into 360 pages. Yeah. So look at the pages on 360 pages. So there's a lot of other information which is going alongside. So that's why you have this section called as other information. Now what do? You will clarify here. Company's management and board of directors are responsible for other information. Other information comprises the information included in company's annual report. Okay. Our reasonable assurance on BRSR code does not cover the other information. And we are not expressing any form of assurance conclusion thereon. Exactly the same thing you do in case of statutory audit report also. Okay. Intended use or purpose. Now they are also specifying that what is the intended use or purpose. Okay. Then they are talking about the management responsibility. So they are saying management of the company acknowledge and understand their responsibility for designing, implementing, maintaining internal controls relevant to preparation of identified sustainability information. Selecting and establishing suitable criteria, all of those aspects as around the preparation of this information, because it's all onto the management. What are the inherent limitations they are specifying? Then they are also talking about their responsibilities. So they are saying we are responsible for planning and performing the engagement to obtain reasonable assurance, forming an independent opinion, reporting our reasonable assurance opinion to the board of directors. Yeah, clear? And then of course any exclusions they will have. So that's something you will see here. Clear on this? Yeah. So I think though we have tried to flip through some of these aspects which are required to be reported upon, but of course if you get into the further details around it, maybe by looking at some of the specific information, okay, and get into the detailed reading of this part, of course you will get more clarity. Yeah, so I would strongly recommend, so as the time permits, just try to look into it. Okay, now moving on to some more questions. So what I'll try to do is I'll just try to look into some questions from the RTP. Okay, so what I've done is I've just pulled out this RTP for January 2006. Yeah, so here we go. Okay, so I just share this. So now we are looking at the RTP of January 2026. Huh? Okay, so let's look at some of the questions. During the audit of Long Limited, auditor came across following instances. Finance team relies on system-generated customer aging report while reviewing overdue balances of trade receivables. Payroll module is designed in such a way that the person entering the employee attendance cannot approve the salary disbursement, thereby enforcing segregation of duties. So the process, I think some of the systems controls are covered, explained here. Next, purchase order system of the company does not allow processing of duplicate vendor codes and automatically reject entries where the vendor GST number is already present. Next, ERP system automatically computes depreciation on the fixed assets by applying straight line method based on input values of cost, residual value, and useful life. Now, in this case, what are you required to do? Identify the type of IT dependency in each of the above scenarios. Okay, yeah. So let's look at this. So we have 4 case scenarios. For each of them, we'll try to look at the IT dependency. So let's go one by one. First, finance team relies on system-generated customer aging report while reviewing overdue balances of trade receivables. Okay, so in this case, what is the type? It's a report, correct? Now, system-generated reports are information generated by IT systems. Clearly, these reports are often used in entities' execution of manual control, including business performance reviews, or maybe the source of entity information used by us when selecting the items for testing, performing substantive test of details, or performing a substantive analytical procedure. Okay, say for example, vendor master report, customer aging report. Yeah. Next, payroll module is designed in such a way that the person entering the employee attendance cannot approve the salary disbursement, thereby enforcing segregation of duties. So it appears to be a security. Yes or no? Now, security, including the segregation of duties, is enabled by the IT environment to restrict the access of information. So it's a control. And to determine the separation of roles and responsibilities that could allow an employee to perpetrate and conceal errors of fraud or to process errors that go undetected. Yes or no? Next. Purchase order system of the company does not allow processing of duplicate vendor codes. Automatically reject the entries where the vendor GST number is already present. So here again, it's a control. It's an automated control, correct? Now, automated controls are designed into the IT environment to enforce business rules. For example, purchase order approval via workflow or the format checks. Say only a particular date format is accepted, existence check. Duplicate customer number cannot exist. Reasonableness check. This is what you can say. Maximum payout amount when a transaction is entered. Yeah, so these are the things you'll have in place. Next. ERP system automatically computes depreciation on fixed assets by applying SLM based on some of the inputs like cost, residual value, useful life. So what do you have? So these are the calculations. So these are what? These are nothing but the accounting procedures that are performed by an IT system instead of a person. Yeah, so in a way, you have automated the setup. For example, the system will apply straight line depreciation formula to calculate depreciation of an asset. Say cost of the asset less residual value, okay, at the end of the useful life divided by useful life. Or the system will calculate the value of the amount invoiced to a customer by multiplying the item price times the quantity shipped. Yeah, so that's what you will see. Correct. Now, looking at the next one. Okay, so we can look at one more. Yes, let's look at this one now. Green Tech Manufacturing Limited, engaged in production or electronic appliances, has been facing criticism from environmental activists, local communities for its high energy consumption, discharge of untreated industrial waste, dependence on non-renewable resources. Considering the same, company's management now wants to strengthen its environmental responsibility practices, align them with national and international commitments such as Paris Agreement, National Action Plan on Climate Change, some of the reporting requirements that we discussed. Identify the principle which is being referred to. Now, principles you need to remember, because some of these things, the principles that you link to, you'll have to sort of cover here. Also state the core elements associated with that principle. Yes, there are two aspects to it, right? So let's look at this one. So the principle number 6, see, you'll have to code that. A principle number 6, protection and restoration of environment, is being referred to in the given case. Sixth principle looks at environmental responsibility as a basic requirement for economic prosperity and sustainability. The core elements associated with the principle are what? Entities should have policies, procedures, practices in place to assess and rectify impacts to the environment. This should cover whole life cycle of the product. Entities have to make use of natural and man-made resources in an optimum manner to ensure their sustainability by taking the feedback from the stakeholders. Entities have to measure their performance relating to prevention of pollution, destruction of forests, waste generation, energy use, land use, etc. Entities have to contribute towards climate change resilience in India, okay, in line with India's commitment to various international mechanisms. Entities should explore comparison of its activities with best practices of the industry. Idea is what? To reduce, reuse, recycle material resources. Companies have to look out for avenues by which they can improve their performance towards various environmental responsibilities. Okay, now let's look at some more. Now let me just move on to the next one. Okay, so what I've done is I've pulled out this another RTP. Yeah, so this is May 26. So let's look at some questions. Okay, so there we go. ELEC Limited is a consumer-oriented company engaged in the manufacturing and sale of household electrical appliances. Company promotes its products widely through online platform and the advertisements. However, some advertisements overstate the benefit of products and do not clearly disclose the information about environmental impact or safe disposal. Okay, so that's the concern. Further, customer complaints relating to data privacy breaches, defective products remain unresolved due to absence of structured grievance redressal mechanism. Company has also discontinued services to certain low-income regions, stating that it's not commercially profitable. With reference to the 9 principles of BRS, analyze the above situation in relation to responsibility of ELEC towards its customers. So let's look at this. Okay, so now let's look at that vis-a-vis 9 principles. So when you look at the practices, overstating product benefits in advertisement, failing to disclose the environmental safe disposal information, customer complaints which are being left out on defective products, data privacy unresolved, discontinuing services in low-income areas. So this indicates the gaps in the responsibility towards consumers and the conflict. Yeah. So what is the conflict? Principle number 9, which requires providing the value to consumers in a responsible manner. Okay, so that's the concern here. So now, what is it that's required to be covered therein? So some of these aspects, let's try to flip through that. Entities should put in their efforts to reduce the negative impact of their product and services on the consumers, natural environment, society at large. Okay. When handling the consumer data, right to privacy of the customer needs to be maintained. Entities should inform the customers on safe and responsible ways of usage, reuse, recycling, disposal, ways to eliminate overconsumption. Yeah. So some of these aspects and some more. Business enterprises should make available, transparent, and accessible grievance redressal feedback management system for their customers to raise their voices or to seek clarifications. Entities, when in the business of providing essential goods and services, say utilities, should enable universal access, including to those whose services have been discontinued for any reason, in a non-discriminatory and responsible manner. Yeah, so that's how you are required to elaborate on the various requirements of the principal. So this is it that we had for today. Thanks everyone for your time today. Ashok, we can close this.